Yeah, good morning, students. So, welcome to the second session of GST amendments class for November 2020 exams. So, let's continue it. So, in the morning, first session, we have completed the amendments from two chapters, supply under GST and charge of GST. Now, let's move on to the amendments in the chapter exemptions. Amendments from the chapter exemptions. So, all this we have completed. Time for the amendments from the chapter exemptions. Some new exemptions added and some changes happened to the earlier exemptions. Some new exemptions added and some changes happened to the earlier exemptions. Let us see. First one, entry number 7. This is not a new exemption, sir. Just a change in the provisions for the existing amendment. You can see here, services provided by the central government, state government, union territory, local authority to a business entity with an aggregate turnover of rupees up to 20 lakhs or 10 lakhs in the case of special category states in the preceding financial year. But now the threshold limits for the registration have been changed. We have also have a new limit of 40 lakhs. If that supplier engaged wholly and exclusively in the supply of goods, and that is to within the intrastate, then he can claim the threshold limit of 40 lakhs. He can claim the threshold limit of 40 lakhs. So let me show you the threshold limits. So you can see on the notes the threshold limit applicable. So registration under GST and their threshold limits. If the aggregate turnover during the previous year, during the preceding previous year or during the year, current financial year, the aggregate turnover exceeds the specified threshold limit, then registration becomes mandatory. Right now. So threshold limit of 10 lakhs applicable to these 4 states. So Mizoram, Nagaland, Tripura and Manipur. For these 4 states, the threshold limit of 10 lakhs is applicable. Those who are engaged in both goods and services are goods and are services. Now, when it comes to the threshold limit of 20 lakhs applicable for Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry and Telangana. Puducherry and Telangana. The threshold limit for registration is 20 lakhs. Now, when it comes to 40 lakhs limit, sir, when the 40 lakhs limit is applicable? 40 lakhs limit is applicable when the supplier is exclusively engaged in the supply of goods, and that is to intrastate within the same state. Within the same state. Then 40 lakhs specified limit is applicable, threshold limit is applicable. And this is applicable for the states of Jammu and Kashmir, Himachal Pradesh, Assam and all other states other than those mentioned above. Other than those mentioned above. And when it comes to services, 20 lakhs. For services, The threshold limit is 20 lakhs. That 40 lakhs, higher threshold limit of 40 lakhs, higher threshold limit of 40 lakhs is applicable only in the case of the supplier engaged in wholly and exclusively in the supply of goods, and that is to within the same state, intra-state. Then only the higher threshold limit of 40 lakhs is applicable. And that higher threshold limits of 40 lakhs applicable to the states of Jammu and Kashmir, Himachal Pradesh, Assam, and all other states other than the states mentioned above. Other than the states mentioned above. These are the threshold limit. Are you following, ma? So 10 lakhs, 20 lakhs. And now we have a new limit of 40 lakhs as well. So the reason for this amendment, let me explain you. Now we are discussing the amendments from the chapter Exemptions. Amendments from the chapter Exemptions. And here the first one is regarding entry number 7. Regarding entry number 7. Just a minute now. Entry number 7 explains about services provided by central government, state government, union territory, local authority. Services provided by central government, state government, union territory, local authority. Provided to whom? Provided to business entity. Provided to business entity. Right? Now, the taxability of this particular transaction is purely depends upon the turnover of such business entity during the preceding financial year. During the preceding financial year. Earlier, the words used are like before the amendment. The words are used like where the aggregate turnover of such business entity, aggregate turnover of such business entity, right, up to rupees 20 lakhs or 10 lakhs as the case may be during the preceding financial year. During the preceding financial year. This is the wordings they have used. Then the services provided by the central government, state government, union territory, or local authority to the business entity exempted from GST. Exempted from GST. Now after the amendment, they have simply removed that limits and that 10 lakhs, 20 lakhs, they have removed that words. They have removed that words. Remove chesi em chesarante with an aggregate turnover of up to such amount in the preceding financial year. So up to such amount annappudu, it covers 10 lakhs, 20 lakhs, 40 lakhs as the case may be. 10 lakhs, 20 lakhs or 40 lakhs as the case may be. See, if you are from a supplier from the state of Jammu and Kashmir, you are wholly and exclusively engaged in the business of supply of goods. If you are a supplier from the Jammu and Kashmir, wholly and exclusively engaged in the business of supply of goods within the state of Jammu and Kashmir, then for you the limit applicable is 40 lakhs. For you the limit applicable is 40 lakhs. Are you following now? For you the limit applicable is 40 lakhs. Earlier the words restricting you to 10 lakhs only 20 lakhs. Now we have a new threshold limit of 40 lakhs. Right, ma? That is why they have removed these words of 20 lakhs and 10 lakhs. Instead of that wordings, they have added the words such amount. Now that such amount includes covering the respective threshold limits applicable to you in your respective states. Right? If you are from Manipur, right? MMNT, Manipur, Meghalaya, Mizoram, Nagaland and Tripura. For you, the limit applicable 10 lakhs. Manipur, Mizoram, Nagaland and Tripura. The limit applicable is 10 lakhs. Now, if you are a business entity from any of these 4 states, now look into the turnover limit of 10 lakhs. So such amount means to be 10 lakhs in that case. If you are from the states of Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry and Telangana, then such amount means to be 20 lakhs. If you are from all other states and exclusively engaged in the supply of goods, 40 lakhs. Supply of services, 20 lakhs. So such amount we need to take in such a way. Clear everyone? Now we have a different threshold limits. That is why they have removed the words 20 lakhs and 10 lakhs. Instead they used the word such amount. Clear everyone? So that's the amendment effect amount. Next. The same amendment effect you will have in the case of the legal services. You will have in the case of the legal services. So let me share that note. Or let me write that point also. Entry number 45. Entry number 45. Here the service provider, an arbitral tribunal, next, service provider, form of advocates, partnership firm of advocates, or an individual advocate other than senior advocate, and next senior advocate, senior advocate Now whenever these suppliers providing services to business entities, same provisions. Now whatever we have written here, the same content applicable here also. So before the amendment, when these services are provided to a business entity where the aggregate turnover is less than or equal to 20 lakhs or 10 lakhs as the case may be, exempted from GST. Less than or equal to 20 lakhs or 10 lakhs as the case may be, exempted from GST. If exceeding the threshold limits, that services are taxable under reverse charge mechanism. If exceeding that specified limits, these services are taxable and taxable under reverse charge mechanism. Right now, if well within the limits of 20 lakhs or 10 lakhs, then exempted from GST. Right. Now, after the amendment, now instead of using the wordings of 20 lakhs and 10 lakhs, they have used the word such amount, aggregate turnover of up to such amount. In the preceding financial year. That is the latest amendment. Instead of using the 20 lakhs and 10 lakhs, because now we have different threshold limits for the different states. So that is why they have used such amount. So basing upon the state in which you are falling in, whatever the threshold limit applicable to you, take the threshold limit. If you are having the turnover less than that threshold limit, that services are exempted from GST. More than that threshold limits, that services are liable to GST. As simple as that. Are you following my everyone? Right, that's the amendment from these two entries. Amendments from these two entries. So now let me share the material. So look at the provision mark before the amendment. Services provided by central government, state government, union territory, local authority to a business entity with a turnover up to 10 lakhs or 20 lakhs in the preceding financial year, exempted. Now look, after the amendment, services provided by state government, central government, union territory, local authority to business entity with an aggregate turnover of up to such amount during the financial year as it make it eligible for exemption. Right now. So that is the latest amendment. And entry number 45 regarding the legal services. Services provided by an arbitral tribunal to business entity. Services provided by firm of advocates or an individual advocate providing the legal services to business entity. Senior advocate providing legal services to business entity with an aggregate turnover up to 20 lakhs or 10 lakhs in the case may be, as the case may be. That's the before amendment. Now after the amendment, they used the words such amount, up to such amount, then you can see here up to such amount, and up to such amount. Instead of using the threshold limits of 10 lakhs or 20 lakhs, they have started using the wordings up to such amount because we have different threshold limits. Next, this is a new entry, sir, as it was mentioned clearly there. It's a new entry. Services provided by and to Federation International Le Football Association, FIFA, and its subsidiaries directly or indirectly related to any of the events under FIFA Under 17 Women's World Cup 2020 to be hosted in India. See, actually, had there been no corona in India, of course, in the entire world, right? We would have seen a prestigious sporting event, that is FIFA Under 17 Women's World Cup in India. For the first time, we got this prestigious event, hosting that prestigious event, FIFA Football World Cup, right, ma? And the hosting countries will get direct entry into that particular matches. No need to play for qualifier matches, right? Or India would have been participated in this Women's World Cup, right? But because of this corona, what happens, ma? this FIFA Under 17 Women's World Cup not been conducted, right? So now there is a new entry. It's actually scheduled in the month of February and March. It was scheduled in the month of February and March, right? But by the time the corona attacked the entire world, right? May not be in India. In India, we have seen the first case on January 30th, I guess, to the best of my knowledge. January 30th, 2020, or February 1st, 2020. The first case registered, first COVID case registered in India. So February 17th, it would have actually started. Around March 7th, around it would have completed. But because of Corona in the situation, in the scene, this prestigious event gone postponed. Olympics itself is gone postponed, sir, to the next year, right? So FIFA Under 17 Women's World Cup. Any services provided by FIFA, provided to FIFA in relation to this event, FIFA Under 17 Women's World Cup, all the services are exempted from GST. All the services are exempted from GST. Of course, the condition to be fulfilled is Director Sports Ministry of Youth Affairs and Sports have to certify that the services are directly or indirectly related to any of these events. Right? Director Sports must certify that particular services. Okay, these services have been related to this FIFA Under 17 Women's World Cup events. Then it will be fully exempted from GST. Fully exempted from GST. Right now, next. Entry number 14. Before the amendment, services by way of a hotel, inn, guest house, club, campsite, by whatever name called for residential or lodging purposes, having a value of supply of a unit accommodation below 1,000 rupees per day or its equivalent. So that means short-term accommodation services, short-term accommodation services. If the tariff rate, right, if the tariff rate is less than 1,000 before amendment, it is less than 1,000. After amendment, it is less than or equal to 1,000. Less than or equal to 1,000 tariff rate. Right, ma? Ante now, even the tariff rate is equal to 1,000 rupees, it is exempted from GST. Short-term accommodation services are liable to GST only when the tariff rate, ante the value of supply of a unit accommodation exceeding 1,000 rupees per day. Exceeding 1,000 rupees per day. Exceeding 1,000 rupees per day. Are you following, ma? Right? So that's the amendment. You can see here below 1,000, below or equal to 1,000, below or equal to 1,000 per day. Right? Next. Entry number 41. This is not a new amendment. This is already existing provision, for which we have some changes. The only change you can see here, 50%. I'll explain. Don't worry, ma. And that now 50% is being reduced to 20%. It's been reduced to 20%. Now, what is this actually about? So, first look at the provision before the amendment. Look at the provision before the amendment. Upfront amount called premium, salami, cost, price, development charges, or by any other name payable in respect of service by way of granting of long-term lease for lease of 30 years, by way of granting of long-term lease of 30 years or more, of industrial plots or plots for development of infrastructure for financial business, provided by the state government, industrial development corporations or undertakings, or any other entity having 50% or more ownership of the central government, state government, union territory, to the industrial units or the developers of the industrial or financial business area. Now, what is this provision? Let me explain with the help of the notes for the better clarity. Entry number 41. Entry number 41. So who are the suppliers here? State government, industrial development corporations, state government, industrial development corporations, and next are undertakings of state government, industrial development corporations, undertakings of state government, industrial development corporations, or any other entity in which greater than or equal to 50% of ownership of central government, state government, union territory, right? These people are the suppliers here. These people are the suppliers here. These people are the suppliers here. And these people are providing the services of, these people are providing services of long-term lease of land for 30 years or more, purpose ఏంటమ్మ ఇక్కడ, purpose ఏంటి, purpose, why is giving it is giving for the purpose of development of an industrial project or a commercial project on that land. And ఎవరికి ఇస్తున్నారు దీన్ని, to the commercial unit or industrial unit. Who are the recipients here? The recipients or industrial unit or the developers of industrial unit or developers of industrial area, industrial or financial area. So where any state government industrial development corporations or undertakings of state government industrial development corporations or any other entity in which greater than or equal to 50% of ownership is held by central government, state government or union territory, central government, state government or union territory, right? Providing services of long-term lease of land for 30 years or more, right? And here the purpose is development of an industrial project, developing that land in an industrial manner, industrial projects or some commercial projects on that land. And the recipient should be industrial units or development or developer of the industrial or financial areas. Here, these particular services are now being covered under exemption. Of course, it's already an exempted service. It's already an exempted service, right now. This is already an exempted service. This particular transaction exempted from GST. Now, what has changed here? What is the amendment here? The amendment is that earlier the condition is that in the case of any other entity granting the rights of providing the services of long-term lease of land for 30 years or more for the industrial units or developers of industrial or financial areas for the purpose of development of industrial projects, right? That any other entity, in that any other entity, the ownership of the central government or state government or union territory should be a minimum of 50%. Should be a minimum of 50%. Now, this 50% condition after the amendment, this has been reduced to 20%. Reduce it to 20%, greater than or equal to 20%. And it's enough that in that particular entity, that concerned state government or central government or union territory enough to hold greater than or equal to 20% of ownership. 20% of ownership. So that 50% condition, reduce it to 20%. Reduce it to 20%. That is the amendment has taken place in this entry number 41. That was the amendment, sir. Earlier it was 50%, now it is reduced to 20%. Clear, everyone? Now let's see the material. Right. So you can see the changes here. Earlier it was in any other entity that government should have a ownership of 50% or more. Now after the government, you can see that after the amendment, it's been reduced to 20%. Same provision, the only change is that 20%. Next. And some other conditions also given, right? You can see that the other conditions, provided that the leased plots shall be used for the purpose for which they were allotted. That is for the industrial or financial activity in an industrial or financial business area. Here that state government industrial development corporations or undertakings of state government industrial development corporations or any other entities in which the government having greater than or equal to 20% ownership rights. Now these people are giving the lands to the industrial units for the purpose of development of industrial areas, industrial projects. That is the purpose for which that land is given to you for a period of minimum 30 years. If you are using that land for any purpose other than industrial development, then that will be a taxable transaction, right? If you violate these conditions, you can see this point, right? Provided further that in the case of any violation or subsequent change of land usage due to any reason whatsoever, that original lessor and original lessee and as well as any subsequent lessee or buyer or owner shall be jointly and severally liable to pay such amount of integrated tax. Becomes why? Because it has now becoming a taxable transaction, as would have been payable on the upfront amount charged for the long-term lease of the plots, but for the exemption contained herein along with the applicable interest and penalty. So whenever you have used that land for any purpose other than industrial projects, then that is said to be the violation of the condition, and you are supposed to pay the integrated tax, this GST, along with the penalty and interest. Along with the penalty and interest. Clear? Next. The same version are explained there also. You just try to remember in that entry number 41 that ownership 50% to 20%. Next, look at that entry number 22. Before the amendment, services by way of giving on hire to a state transport undertaking STU, a motor vehicle meant to carry more than 12 passengers. Meant to carry more than 12%. This is a before the amendment provision. Now after the amendment, what was newly added? This point number B. Point number B, newly added. After the amendment, services by way of giving on hire, right? Point number A is as it is, even before the amendment that was there. And point number B is newly added. To a local authority, an electronically operated vehicle meant to carry more than 12 passengers. Electronically operated vehicle, right? And it's not depending upon the fuel, it's purely depending upon, right, the energy derived from an external source or from one or more electrical batteries fitted to such road vehicle, electronic motor vehicles, right? Even if you've taken any loan for the purchase of this electronic motor vehicles, whatever the interest paid by you, that interest amount is also eligible for deduction under section 80 EEB of the Income Tax Act 1961. There were two new sections introduced, 80 EEA, 80 EEB. 80 EEA is applicable in the case of interest on housing loans. 80 EEB is with respect to interest on loans taken for the purchase of electronically motor vehicles. See, government wants to increase the usage of electronic motor vehicles, electrically operated motor vehicles. Why? Because of this, there will be so many advantages, like you don't need to depend on Arab countries for the more and more fuel. Whatever the fuel consumption is happening in India right now, majority of the fuel we are importing from Arab countries. Arab countries, right? So when our our India is more depending on electrically operated vehicle, there is not much need of that fuel. So the dependency on Arab countries will get reduced. Right, ma? Second thing, pollution will be reduced to a great extent. Pollution, air pollution, sound pollution will get reduced to a great extent. States like Delhi need not come up with the scheme called odd even system. In Delhi, whenever there is a heavy pollution, they'll come up with a scheme called odd even system. And one day only odd number vehicles, right, ma? Your registration plate is there now, number plate is there now. Look at that last number. If it is an odd number, okay, you can go on with your vehicle on this day. Tomorrow, even number vehicle. So tomorrow you cannot take your vehicle out, right? If you take out your vehicle, you will be liable for penalty. So in order to reduce that, pollution, the Delhi state government come up with the concept called odd even system. In future, we can observe these kind of systems even in many of the states. Because of that air pollution, there were so many, sound pollution. There were so many people are getting, different diseases by inhaling that contaminated air, polluted air. It will have a direct impact on our lungs, right? So that is why, in order to reduce that pollution impact as well, government encouraging the usage of electrically operated vehicle. In income tax, you have deduction benefit of rupees 1,50,000 every year, 1,50,000, as long as your loan repayment continues. If the loan repayment continues for 20 years, you can claim deduction of 1,50,000 every year for 20 years under section 80 EEB. Now, under section in the entry 22, now this services by way of giving on hire this electronically operated vehicle, which is meant to carry more than 12 passengers, also now covered under exemption category. Right, ma? Next, but of course the condition is that you need to give that electrically operated vehicle on hire basis to the local authorities, not to the central government, not to the central government. Only when you're giving this to the local authorities, then only you can exempt. You can claim the exemption benefit. Okay, now next, there is a new entry That is entry number 24B. Entry number 24B. Services by way of storage, warehousing of the cereals, pulses, fruits, nuts, vegetables, spices, copra, sugarcane, jaggery, raw vegetable fibers such as cotton, flax, jute, etc., indigo, unmanufactured tobacco, betel leaves, tender leaves, coffee and tea. So in relation to these products, if you are providing the services by way of storage and warehousing, that services are now being covered under exemption. That services are now being covered under exemption. That's a new entry. Next, entry number 35. It's not a new entry, but having an amendment to that entry number 35. What was that? It exempts services of general insurance businesses provided under specified schemes. We have list of 17 specified schemes in entry number 35. Right? There is new scheme added, new scheme added. That a new clause or has been added. Earlier it is A to Q only, 17 schemes only. Now 18 scheme added, that is services of general insurance business provided under Bangla Shashya Bima scheme have been exempted. Any general insurance services, any general insurance business services provided under Bangla Shashya Bima scheme have been exempted from GST. Now, what is this Bangla Shashya Bima scheme? Let us ask Google. So from this output, we can directly see that it is in relation to the farmers. Farmer corner, insurance corner, report crop loss, application status. So we directly redirected to that website of Bangla Shashya Bima. So West Bengal government has introduced the schemes here for the farmers in their state. West Bengal have introduced this scheme. You can see here the explanation. This scheme is implemented with the aid of the government of West Bengal for the farmers cultivating crops in West Bengal. So objective is that BSB, Bangla Shashya Bima scheme, aims to supporting the sustainable production in agriculture sector by way of providing financial support to the farmers suffering crop loss or damage arising out of unforeseen events and stabilizing the income of the farmers to ensure their continuance in farming. Right? So it's enough to know up to this. What is Bangla Shashya scheme? It is enough to know up to this. It's a scheme implemented with the aid of the government of West Bengal for the farmers, right? Cultivating the crops in the state of West Bengal. The main objective of this scheme is that in order to provide the continuous financial support to the farmers who are suffering from crop loss or damage to that particular crop arising out of unforeseen events. That may be because of natural calamities, and stabilizing the income to the farmers to ensure their continuance in the farming. Okay, ma. So that's about Bangla Shashya Bima scheme. Now, what you need to remember is that any services in relation to the Bangla Shashya scheme, Bima scheme, is exempted from GST, right? So that's newly added into that entry number 35. So up to this, enough to know. Clear, everyone? Next. New entry number 82 here. Again, this is in relation to FIFA Under 17 Women's World Cup. Right, services by way of right to admission to the events organized under FIFA Under 17 Women's World Cup 2020. Right, and assuming that February 17th is the starting date of this World Cup match. So in Bangalore, there is a match is going on. I'm a very big fan of football matches. I want to see this match live. I want to see this match live. So I went to Bangalore. I purchased a ticket. In order to watch the sporting events, you need to purchase the tickets. I purchased a ticket for rupees 5,000, and then I entered into the stadium and watching the match. Now, what was the ticket I paid? 5,000 rupees, right? That admission ticket, 5,000 rupees. Now, will it be liable to GST? No, answer is no. Basically, whenever you are paying an amount admission ticket to attend to any recognized sporting events, that is liable to tax, right? We have some specified limits. If that specified limit exceeding, then it will be taxable. But when it comes to the services by way of right to admission to the events of the FIFA Under 17 World Cup events, then it will be fully exempted from GST. Right now, next, moving on. Clarification regarding the applicability of GST on delayed payment service charges in the case of late payment of equated monthly installment, EMIs. Right. There are two transactions options involving EMI that are prevalent in the trade. These two options along with the GST applicability have been explained as under. Option 1, financial assistance directly provided by the supplier to buyer. Option 2, financial assistance is provided to the buyer from a third party. So for the two options, you have given me the two examples. So let me explain the same example with the help of the notes for the easy understanding. Clarification regarding applicability of GST on delayed payment charges in the case of late payment of EMIs. In the case of late payment of EMIs. So in that option 1, financial assistance provided by directly provided by the supplier to buyer. By the supplier to the buyer. Financial assistance directly provided by the buyer to the supplier, by the supplier to the buyer. Now let us see the example here. Mr. X buys the goods from the supplier Mr. Y for rupees 40,000. Right now, who is the supplier here? Mr. Y is the supplier. So Y is the supplier. Mr. X is the recipient. Mr. X is the recipient. Mr. X is the recipient. Right now, and Mr. Y sold goods worth rupees 40,000 rupees, and which will be payable in 11,000 per month in 4 installments. Repayment along the month. Repayment 11,000 per month, 4 installments. 4 installments. So it will be comes to totally 44,000 rupees. For giving this time period of 4 months, he charged 4,000 rupees as interest. Okay, ma. So 11,000 per month into 4 installments, it will comes to 44,000. It will comes to 44,000. Clear? Now, good. Now, and among Mr. Y and Mr. X, among Mr. Y and X, there is an agreement. What Mr. Y has said, if you made any delay in payment of these EMIs, if you made any delay in payment of these EMIs, I will charge interest 2.5% per month. Of course, Mr. X, the consideration for which the interest is 2.5%, that is normally levying. In addition to that, 500 per month for each delay in payment of EMI. The agreement is that 500 per month. 500 per month is the penal interest or additional interest if there is any delay in payment of EMIs. That's the agreement between them. 500 per month is the penal interest if there is any delay in payment of EMIs. Now look at here, Mr. X made a default in payment of EMIs for 2 months. X made a default. So he made a delay of 2 months. So that means what is the penal interest here? So therefore penal interest is equal to 500 per month into 2 months, which will comes to 1,000 rupees. Which will comes to 1,000 rupees. Now the question arises whether this penal interest of 1,000 rupees, whether this penal interest of 1,000 rupees forming part of transaction value under section 15. This is a question whether this penal interest of 1,000 rupees is forming part of a transaction value under section 15. This is a question. Now whether that supplier is under any obligation to levy the GST on this 1,000, liable to GST or not. Liable to GST or not? The second question arises. Of course, anyhow it is forming part of, if it is forming part of transaction value, it is liable to GST. If it is forming part of that transaction value, it is liable to GST. Clear now? Now these two questions arises. This 44,000 anyhow taxable amount. That's forming part of transaction value. That 44,000 is forming part of transaction value. Now the question is about not the entire 44,000. It is about that penal interest, the delayed payment charges. Delayed payment charges. That is what the clarification regarding the applicability of GST on delayed payment charges. This 1,000 penal interest, which can also be called as what? Delayed payment charges. Delayed payment charges. Now, whether the GST is applicable or not, answer is absolutely yes. If the financial assistance is given by the provided by the supplier directly, now whatever the delay charges collected by the supplier is liable to GST amount. Liable to GST, right? So you can see here clarification. You can see the clarification. Any delayed payment charges collected by the supplier from the recipient with respect to default in payment of EMIs. Payment of EMIs. Now, this particular delayed payment charges are forming part of transaction value. Forming part of transaction value as per section 15 and liable to GST. Liable to GST. Even in the chapter time and value of supply, even in the chapter time and value of supply, also we have learned that in the case of delayed charges, the time of supply is equal to the date on which the delayed payment charges received by the supplier is a time of supply. Do you remember? Now in this case, you can write that point also, ma. When it comes to the delayed payment of charges, time of supply is equal to date on which the delayed payment charges received by the supplier. So that particular date should be treated as time of supply here. That particular date should be treated as time of supply here. This is option 1. Financial assistance directly provided by the supplier to the buyer. This is how the tax treatment. Now coming to the option 2. What is option 2? Finance assistance provided by third party to the buyer. Financial assistance provided by the third party to the buyer. Same example, whatever they are given in the material, I am explaining the same. Mr. Y supplied goods worth rupees 40,000 to Mr. X. So Mr. Y status is here supplier, Mr. X recipient. So Mr. Y supplied 40,000 goods worth to Mr. X. Now, this time, Mr. X received the financial assistance from ABC Limited. ABC Limited is a third party here, right? Provided finance assistance. To Mr. X. Provided the financial assistance to Mr. X. So Mr. X borrowed the money from ABC Limited, and with that money, Mr. X purchased the goods from Mr. Y. Here, the financial assistance is not given by the supplier. Financial assistance is given by a third party to the contract. Here, ABC Limited status is a third party. Third party to the contract. Okay, now Mr. X is going to repay this amount. Mr. is going to repay this amount in 11,000 per month, 4 EMIs. 11,000 per month, 4 EMIs. 11,000 per month, 4 EMIs. Suppose that Mr. X made a default in payment. Mr. X made a default in payment of EMIs. Mr. X made a default in payment of EMIs. And here, ABC Limited, the third party, charged penal interest, that is 500 into 2 months is a default, 1,000 rupees. 1,000 rupees. Right. Now, in this case, now the question arises here. Whether this penal interest of 1,000 rupees is liable to GST. This penal interest of 1,000 rupees. Same two questions. Question number 1. Does it forming part of transaction value? Does it forming part of transaction value? Question number 2. Whether GST leviable on it or not. These two questions arises. The correct answer is no. No, it's not forming part of transaction value and GST is not leviable on it. Sir, in the first option, you said it is forming part of transaction value and liable to GST. And in this option, you're saying it is not forming part of transaction value and not liable to GST. So what's happening? The difference is earlier the financial assistance is given by the supplier. So any amount received by the supplier in the form of delayed payment charges, that will be liable to GST. But here you have received the financial assistance from a third party who engaged in the business of lending of money. Right now, we have seen transaction where services by way of extending the deposits, loans or advances in so far as the consideration is represented by way of interest or discount. That particular services are not liable to GST, exempted from GST. The principal portion exempted, interest portion exempted. Right here, the ABC Limited is engaged in the business of such services. Example, Maha, whenever you are buying some electronical goods, sir, I'm buying a new mobile, sir. I purchased this mobile, let us assuming that on EMI's basis. You might have seen some offers in the market. Of course, the Dasra festival season is going to arrive. In that season, you can observe various offers like pay 1 rupee, take air conditioner to your home. Pay 1 rupee, take a mobile phone, 1+ 7 Pro, 1+ 8 to your home. It doesn't mean that the cost of the product is 1 rupee. That's the down payment. The remaining payment will be you have to make in the form of EMIs. And who is providing the assistance here? Assuming that the financial assistance is provided by the Bajaj Finserv. Bajaj Fin Corporations. Bajaj Finserv what mika services provide chesadu. Financial assistance ichadu. So Bajaj Financial Services, the business activity of that person is services by way of extending deposits, loans, and they will charge interest for it. That services are exempted from GST, not forming part of transaction value. We have seen already that entry number 27, as per the provisions of entry number 27 of Schedule 3, negative list, exempted ma, exemptions, right ma. Here the services are provided by ABC Limited, right ma. So that is why, the transaction between X and ABC Limited would not be subjected to GST, as it would be covered under the said exemption entry, right? But if they charges any service fees, any other charges, that will be liable to GST amount. But here, this penal interest of 1,000 rupees, this is not liable to GST. That clearly given here, right? Clear, ma'am? Next. So let me share the material. Yes. So you can see it here, ma'am. Clarification regarding option 1, financial assistance directly provided by the supplier to the buyer. We have seen that it is forming part of transaction value and liable to GST. So 44,000 EMIs, 1,000 penal interest, totally 45,000 liable to GST. That penal interest of that 1,000 is also liable to GST. Next, look at the option 2, financial assistance provided by the third party to the buyer. Clear? Here X borrowed 40,000 from ABC Limited and paying 11,000 per month in 4 EMIs. Apart from that, he is also paid some penal interest. You can see here, services by way of extending deposits, loans, advances, insofar as the consideration is represented by way of interest or discount, other than interest involved in credit card services. And that means interest on credit card services, that is liable to GST. Other than it are exempted from tax, while entry number 27. Consequently, in this case, penal interest charged thereon on a transaction between X and ABC Limited would not be subject to GST, as the same would be covered under the said exemption entry. Okay, ma? Right. Next. Clarification on issues related to GST on monthly subscription or contribution charged by the Resident Welfare Association from its members. A Resident Welfare Association from its members. Ma, basically, in every apartment or in every gated community, gated societies, gated community areas and societies, we will observe this kind of residential welfare associations, like apartment owners associations, gated communities owners associations. Who are the members in that association? The owners of the respective flats. Sir, if you observe an apartment consisting of some 30 flats, right, for that apartment there is an association will be there. That is what we call apartment owners association. Who are the members? The 30 flats owners will be the members in that association. And this association will collect maintenance charges from the flat owners. Maintenance charges. And what is this welfare association is going to do with that maintenance charges? It will provide you the facilities like common lighting, lift maintenance, maintenance of the lawn, maintenance of the garden area, maintenance of the swimming pool, maintenance of the clubhouse, payment of electricity bills for the common lighting and clubhouse, everything. These are the services provided that welfare association to its members. Yes, watchman salary, very good. Okay, ma'am. These are the services provided by the welfare association to its members. For these purposes, that welfare association will receive the maintenance charges from the members. Now the question arises whether these maintenance charges are liable to GST. We have an exemption benefit as long as the maintenance charges not exceeding 7,500 rupees per month per member, then it is exempted from GST. Then it is exempted from GST. Not exceeding 7,500 per month per members, exempted from GST. If exceeding 7,500 per month per member, that is liable to GST. Sir, only the excess portion liable to GST, entire portion liable to GST. Sir, what if the case if the Resident Welfare Association is an unregistered entity? What if the case if it is a registered entity? Like this, there will be some questions arises. For all the questions, now in this Finance Act 2019, we have seen some clarifications. Look at that. First one, or the maintenance charges paid by the residents to the Resident Welfare Association in a housing society exempt from GST? And if yes, is there an upper limit on the amount of such charges for the exemption to be available? Answer is yes, there is exemption benefit, and the upper limit, as I said, it is 7,500 per month per member. 7,500 per month per member. So supply of services by Resident Welfare Association to its own members by way of reimbursement of charges or share of contribution up to an amount of 7,500 per month per member for providing the services and goods for the common usage of its members. Okay, now, so exempted from GST as long as the maintenance charges are less than or equal to 7,500 per month. Up to 1 less than or equal to 7,500 per month, exempted from GST amount. Next. Look at the second question. A Resident Welfare Association has aggregate turnover of 20 lakhs or less in a financial year. Is it required to take registration and pay GST on maintenance charges if the amount of such charges is more than 7,500 per month? See, as long as that welfare association's turnover is less than or equal to 20 lakhs, no need to take registration and no need to pay the tax on that maintenance charges exceeding 7,500 per month per member. The taxability arises only in the case of a registered welfare association, registered resident welfare association. If it is an unregistered resident welfare association, taxability doesn't arise. So when your turnover is less than or equal to 20 lakhs, the answer you can see here, no. If the aggregate turnover of Resident Welfare Association does not exceed 20 lakhs in a financial year, it shall not be required to take any registration and shall not be required to pay any GST, even if the amount of maintenance charges exceeds 7,500 per month per member. Are you following now? Right. Next. Resident Welfare Association shall be required to pay GST on monthly subscription when the turnover exceeding 20 lakhs or more. Are you following? Sir, 20 lakhs or more or not? More than 20 lakhs is a correct sentence. More than 20 lakhs. Shall be required to pay GST and monthly subscription or contributions charged from its members only if such contribution is subscription is more than 7,500 per month per member and the annual aggregate turnover of the Resident Welfare Association by way of supplying services and goods also exceeding 20 lakhs. 20 lakhs or more or not, wrong, exceeding 20 lakhs. Clear everyone? Next. Annual turnover of Resident Welfare Association more than 20 lakhs, right? So monthly maintenance charges more than 7,500. Whether it is an exempted supply? No, it is a taxable supply. When it is its annual turnover exceeding 20 lakhs and maintenance charges collecting from its members are more than 7,500. Now in that case, that maintenance charges are liable to GST. The supply of services provided by the Resident Welfare Association to its members liable to GST. So whether it is exempted, no, liable to GST. Sir, registered that Resident Welfare Association turnover exceeded 20 lakhs, but the maintenance charges collected 7,500 or less, exempted from GST. Sir, if the annual turnover of that Resident Welfare Association is less than or equal to 20 lakhs, in all the cases it is exempted from GST. irrespective of the fact whether monthly maintenance charges is more than 7,500 or less than 7,500, as long as the aggregate turnover of resident welfare association, as long as the resident welfare association aggregate turnover is less than or equal to 20 lakhs, any maintenance charges it is collected from its members, whether exceeding 7,500, not exceeding 7,500, that services are exempted from GST. So you need to remember only one thing: the resident welfare association turnover should exceed 20 lakhs. Monthly maintenance charges exceed 7,500. Only in this case, the services provided by the resident welfare association to its member liable to tax. Only this case. Remaining in all the cases, the services provided by the resident welfare association to its members exempted from GST. Clear, everyone? Right. Next, look at the next issue. Is a resident welfare association entitled to take input tax credit of GST paid on input and input services used by it for making supplies to its members, and use such input tax credit for the GST liability on such supplies, where the amount charged for supplies is more than 7,500 per month per members? Answer is yes. It can claim input tax credit, and it can use that input tax credit for paying the output tax, right? Absolutely no problem, sir. We can see here, resident welfare associations are entitled to take input tax credit, entitled to take input tax credit of GST paid by them on capital goods like generators, water pumps, lawn furniture, etc., and input goods like taps, pipes, other sanitary and hardware fittings, etc., and input services such as repairs and maintenance services. So resident welfare association, if their services are liable to tax, they are entitled to take input tax credit on input goods, input services and capital goods. No restrictions, right? They are free to take input tax credit. Next, point number D. Where a person owns 2 or more flats in the housing society residential complex, where whether the ceiling of 7,500 per month per member on the maintenance for the exemption to be available shall be applied per residential apartment or per person. And that means, sir, in an apartment, I have 2 flats, ma. I have 2 flats. Now the question arises that 7,500 per month per member, should I apply for each flat separately? Should I apply for both the flats collectively, as both the flats are owned by only one person? I have 2 flats in an apartment, sir. In an apartment, I have 2 flats. Assume these 2 flats are owned by me. These 2 flats are owned by me. Now the question arises that 7,500 per month member is, should I apply for separately for each flat, or the 7,500 limit applicable for both the flats collectively, as both the flats owned by one person? The answer is that 7,500 per month per member you need to apply separately per flat, even if the more than one flat is owned by same person. Separately you need to apply, sir, not aggregate. Separately you need to apply each flat. Though these 2 flats are owned by me, for each flat I need to look into how much maintenance charges I am paying for each flat. For each flat I am paying maintenance charges of more than 7,500, liable to GST. Not collectively, ma. Don't say that, sir, each flat we are collecting 4,000 per month, sir. Sir, you are owning 2 flats, kada? So 4,000 into 2 flats, 8,000 you are paying, sir. So 8,000 and exceeding 7,500, sir, liable to GST. This is wrong. You should not calculate like this. Aggregate chesi 8,000 greater than 7,500. So liable to GST, not like that. You need to apply separately. You need to apply separately. Are you following, ma? Right? So separately, you need to apply 7,500. Any doubts? So look at here, example also given, ma. If a person owns 2 residential apartments in a residential complex and pays 15,000 per month as maintenance charges, right? That is maintenance charges of each apartment 7,500 per month. Then only that GST will be applicable, ma. Exceeding 15,000 GST applicable. Less than or equal to 15,000 exempted, ma. 2 flats kada 7,500 into 2. 15,000 will be the criteria. Any doubts? Next. Okay, now we will stop here, sir. We will stop here. Right? So exemptions chapter amendments completed with this. It's 12:55 now. You can ask me the doubts, right? After the lunch break, we will start this input tax credit amendments, right? So at 1 o'clock, we will take the break, and 1 to 2:30 or 1 to 3, your wish.